It's just money. It's made up. Pieces of paper with pictures on it so we don't have to kill each other just to get something to eat. It's not wrong, and it's certainly no different today than it's ever been. 1901, 07, 29, 1937, 1974, 1987, Jesus, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves. We just react. And we make a lot of money if we get it right.
Men of culture, assemble. It is time for tomorrow's TA Today. Guys, we have a lot of economic data this week. This is a pivotal week. We could be triggering the SOM rule, the unemployment rule, which 100% guarantees a recession going all the way back to World War II. The 3-month moving average moving up 50 basis points off the low over the course of a year. That could trigger this week. We have 4 companies of the Mag 7 reporting earnings. We had McDonald's come out. As we all know, America is the most obese country in the world, and McDonald's reported the first quarterly loss of sales since 2020. This is very cheap, fast service food. The economy is slowing down. There's a lot of economic data this week, but perhaps the most important one is going to be Powell with the Fed. Remember, the Fed is this week. Powell is going to decide to cut rates or not. Now, the market has not priced in a rate cut for this week. It has the rate cut on September 18th, the identical day the Fed first cut rates in the GFC. So if Powell does come out extremely dovish, this can give some jet fuel to the dead cat bounce that I believe you're seeing in some markets and carry it into the broader markets such as the S&P and the NASDAQ. And this is where the trades will be setting up. Important video for you today. We're going to go over all of this in the charts, guys. Be sure to like and subscribe to the channel. Lee, let's start the show. All right, guys, before we jump into the TA, take a moment. Be sure to subscribe to the channel if you enjoy this programming, and be sure to like the video. If you want to trade these markets, check out the fantastic exchanges in our video description. And if you would like to join our community of members, staff, traders, investors, check out our Discord. That link is also in the video description, as well as Lee's Telegram if you have any questions about any of the above. All right, guys, so let's start off on the ES. This is the S&P futures. We're looking at the S&P futures, and I want to show you once again the similarities with the GFC, down to the point where I believe we are right now, right? This is where we are right now. July 16th, we put in the high. Then we started our retracement. This move, guys, this move is where we are now. We're going to have our retracement, our basing, our bouncing back up for the new all-time high with the September 18th rate cut is how I believe this is going to play out. We've been over this many, many times. I think it's very important to understand this is not a guarantee, but this is a potential roadmap and guide. We retraced 12.5% after we made that peak. We made a 12.5% decline and then climbed. We based and then really spiked up with that rate cut September 18th. We rallied for less than 30 days. That's the market cycle I think we're repeating because we did the exact same move so far in our current ES chart on 2024. S&P futures, guys, you've seen my wave count. We've looked at the Fibonacci layouts. We've taken our wave 1 down to our origin point. We had a beautiful setup here at the wave 3 peak for this nice 400-point decline, and then we had the rally up to the wave 5. We also tracked this on Fibonacci as well. Notice I had 57.67 at the 200% expansion. We did not quite get there, and we could still it'll get there if we get a vicious rebound with some of these factors we're talking about this week, right? Unemployment, let's say it doesn't go up. Let's say Powell. Let's say Powell is totally dovish at this meeting, basically prepping and setting the market up for the September 18th hike. Maybe we can get a big rally for a false break pattern. But if we take our wave 3 to our wave 4, we can see we did hit the 200% expansion, 5703, spike just above it, the 5721. And now we've had our nice decline, right? So before we talk about the upside targets of where these trade setups could be, let's look at, because people are asking me, what about the downside? Well, we've been over the downside, but what I want to do is look at my wave 4. This is not Elliott wave. Before anybody comments about that, look at my wave 4 to wave 5, and let's look at the two most likely targets. Over a 50-year study tells you that the 618 is the most commonly retraced to fib, 52.53. The 786 is 51.25, just beneath it. What is our average retracement going back the last 5 years? 10.5%. Where's a 786? Exactly 10.5%. So 51.25 and just above it for a weaker retracement for an 8.5%, 8.33% drawdown, 52.53 are the two areas that we're looking at. Not a collapse, guys, because again, I don't think that collapse happens until post the first rate cut, because we will get that rally just like we did in .com, just like we did in the GFC, that rally, which should last about 3 to 4 weeks, and then the peak, and then the decline, okay? So that's what I'm looking at. So what I would like to see is this price move back up. Let's zoom into the daily chart. Let's look at some key factors here. Algos, 50% to 60% of the market is traded based solely off algorithms. And as you can see, you're above the 50, right? Want to see price come back up and fail. That's what I want to see, the dead cat bounce, which is early forming here on the S&P. To get targets, we can pull a fib from that all-time high down to that corrective fractal low. The two targets that I like are 56.11 and 56.59. And I know some of you trade the SPY. I know some of you just, trade options, whatever. You can get these fib targets no matter your chart, pulling them the same way, pulling from your all-time high, pulling to your corrective low, and you can get that set up for the particular vehicle that you like to trade. So we're at 55.15. We're still almost 100 points below the 618, which is why I think the market has some work to do. Now, could this just start capitulating and falling? Of course it could. It's literally what it did in this corrective cycle here back in the GFC, right? You didn't get much of a bounce here. You got this little baby bounce here on the daily time frame. You came down, came up, and then boom. So could that happen? It could. But again, as traders, we're looking for setups, right? 12.5% decline in the GFC, average decline 10.5%. Gave you those targets to look at. And I'm looking at these upside targets, 56.11, 56.59. Now that would mean for this to really play out in this dead cat bounce, and it doesn't just roll over and capitulate below the 50, we need to see some friendly data come in, right? We need to see some friendly data this week. Powell probably has to be pretty dovish. We know by nature he's pretty dovish. He needs to be dovish. He needs to give the market hope, and you need to see the rally up continue to those resistance levels. So we're going to continue to watch that. Let's move forward. What about the Dow? The Dow has been, here's our trend line going back to the GFC, hit it, made our beautiful W pattern here, right? We got our beautiful W pattern here in the daily time frame. And then what happened? We spiked up, fell back below the trend line, trying to come back up. Do the same move on the Dow, your fractal high here for your all-time high, down to your market or down to your corrective low. You hit the 618 this morning prior to recording, 51,054. I would like to see the Dow come up into the kill box, the area between the 618 and the 786, and start to form a top. The 786 is 41,326. Want to see this move come up here, struggle, then break back down, okay? That's the move I'm looking for in the Dow. What about the NASDAQ, the NQ? We've hit some key geometric targets here, the 100% expansion off the cycle low, right? 100% expansion, almost to the dollar on a $20,000+ asset. We got within like $13 just above, and then the big roll down. You look at it on a 3-day chart, you're putting in a little bit of a doji here. Let's get our downside targets for the NASDAQ, okay, in case it does just capitulate. I want to take my wave 4. Harmonic cycle is 5 waves up to the wave 5. The 618 is 18,591. The 786 is 17,941. Let's assume this all-time high is the high before the correction. If we get a measurement down to the 618, it's 11.34%. Remember, the NASDAQ typically corrects more than the S&P, and it pumps more than the S&P. So that's a deeper correction, just getting to the 618 at 18,591. The 786 is 17,941. Maybe you end up somewhere in between with some wicks, looking at a 10.5% decline in the S&P and somewhere between an 11% and a 14% decline in the NASDAQ. But what do you need before that happens? That's right. You need the dead cat. You got the dead cat bottom. You need the dead cat bounce, right? You need that dead cat bounce before you can do this. So let's move on to the next chart. Let's look at the NASDAQ here. Some key metrics to track. You are below the 50, right? So we had our pattern form here. You could call it a head and shoulders, call it whatever you want. Left shoulder, right shoulder, right down here, then you broke down. Doesn't matter what you want to call it. Key point being you fell down. You're trying to pump back up. You got to get back above the 50 at 19,600. You're at 19,300. The NASDAQ has a lot of work to do. And again, we have 4 of the Mag 7 reporting this week. So that'll be interesting to see. Some things to consider is McDonald's. You know, Americans love their fast food, the most obese country in the world. McDonald's reported quarterly loss in sales for the first time since 2020. The economy is slowing down. That's something everybody needs to understand, and that's by design. It is supposed to slow down. The stimmy money, all the Fed pumping, all of the fiscal pumping from the government, the trillions pumped into the markets, the trillions pumped into the economy have kept these markets afloat much higher and much longer than they should be, but the cycle's not done. And we got all these great trades in front of us. So let's take the fractal all-time high down to that corrective fractal low. I mean, this seems like a big ask at this point. The 618's at 20,181. You got to come up. You have to come up 800 points just to get to the 618. Is it possible? Sure it is. You know, maybe these reports are good. Powell's dovish. People pile back into growth. Just want to watch that. But the 618, 20,181, and then 20,534. I want to be in my kill box here for a trade. Now, what would happen? Maybe you're just solely focused on trading the NASDAQ. This is why I track multiple assets. Some assets will get to target. Other assets will not. But I want this price to rise, dead cat bounce, form a top, 618, 786, and then retrace. And then I gave you that lower level target. So we have work to do. Again, pivotal week. Always be aware. You could simply get a retest of the 50, maybe a little double top on a small time frame, and you're going down. You didn't get that trade with this type of setup. Perhaps you have another method that works for you. Let's look at the Russell. Why do we want to look at the Russell? Well, Tom Lee came out last week. We've been talking about Tom Lee the last couple of videos. That is not intentional. He's just saying some wild shit. And last week he said the Russell is poised to go up 40% over the next 10 weeks. 40%. I just want to put this in perspective for you, what 40% is, okay? We got to shrink this down so you can even see this. So here's your previous all-time high, which you have not taken out since November 2021. So 40%. Let's go ahead and do 40%. He said this, we had already made this high, so let's go up 40%. I mean, this is 42% takes you to 3282, right? So there's your 42%, takes you to 3282. This is what Tom Lee's predicting, and now the next 9 weeks for the Russell. Now, something that I want everybody to understand, is this possible? Sure, it's possible. This isn't happening if we get the correction, because he also has the S&P being flat for the month of August, meaning not up, not down. It's just sitting still. I don't see that happening. Is this possible? Sure. But understand what the Russell is. And most people don't understand what it is. 43% of the Russell makes $0. They live off of debt. This is beta. This is early cycle, not late cycle. But this is why the narrative matters. If your narrative is soft landing, no recession, a la Tom Lee, he comes out with these projections of the S&P tripling to 15,000 by 2030, about 5.5 years from now. So he has the S&P going to 15,000. He has the Russell going up 40% in the next 9 weeks. I don't think either of those will happen. Let's zoom into the Russell. Could the Russell break out? We get the dovish Powell, we get the dead cat bounce in the mother market, which is the S&P, $50 trillion market. So yes, you could get more upside in the Russell. What would that target be? Well, let's zoom in a little bit. Let's go to the 8 hours in the Russell and see what we have here, right? Because I see a beautiful W pattern that formed. So I want to get some projections of where this could go. So we can look at the 1618, 2319 to 2350. That would be my two target projections if we can take out, because notice what you are stuck at. Once again, the 786 from the all-time high to the cycle low is where you're struggling, but you're putting in your series of higher lows if you can hold this higher low. So could you break out to the upside? You could. I don't think you're getting 40%. I think max best here, that 2350, 2375 area is where you could get to. And let's just measure that to give you a target comparison versus Tom Lee. That would be a 3%. Not 40%, a 3% move. So there you go. Tom Lee has a 40% gain in the S&P. In the Russell in the next 9 weeks. I have a potential 3%. Could you get super bullish? Sure, but maybe that just takes you to that 2,400 level. But we'll see, guys, how it plays out. 40%. Just remember human psychology, human sentiment. Again, not to pick on Tom Lee. This is everybody. Bears tend to get super bearish at bottoms. Bulls tend to get super bullish at tops. Tom Lee has nailed some turns with his super bullish prediction, and then we saw market meltdowns. Let's see what happens here in the Russell, because I don't envision us getting much past that 2350, 2400 level. And until then, you have to clear 2284. This week will be pivotal to see what happens in the markets. You have a nice W forming here on your money flow as well. So you could see that type of move to bring you up to that next level target. Something to consider on the small caps. What about Bitcoin? Bitcoin is tracking beautifully. Guys, I want to focus on the wave symmetry. We have our moves down, as we've discussed ad nauseum. 23.5% move down, 26% move down, right? Wave symmetry. What about the rises up? The rises up, we have symmetry as well. Let's go to that peak. We have 27.5%. Where are we right now? 31%. We got a little bit higher here. Of course, we're selling off some now, but we got to 31%. Something else to look at. I like to look at the tops in these waves, see how they're playing out. Go to our all-time high, go to that second peak here. 2.4% difference, right? And the next wave down. Let's go to that second peak, down to the third peak. 2.77% difference. Again, symmetrical moves in the marketplace. This week is going to determine what happens with these assets. You have Bitcoin pushing up, but you have a symmetrical decline. You could even look at it like this type of pattern. You have multiple patterns in here, right? So you have this W pattern, this deeper W pattern that's finding resistance. We know that if we pull the fib from the all-time high down to that corrective low so far, we're finding that resistance right at the 786 at 69,454. Where did price get to? 70,000. Okay, we got the 70,000. I told you last video, I like this 60 or the 71K up here to get up here and really struggle. I want to see what happens this week with the assets, because if we get that big bounce in the S&P, in the NASDAQ, if you get further movement in the dead cat bounce, you could see Bitcoin come up here and challenge these highs. Okay, we've already come down to our first level target, the 53K target. My second level target's the mid 40s for that next wave down, giving you wave 1, wave 2, wave three waves to a bottom, which I think Bitcoin will do in the corrective move. But it doesn't mean, just like with the Russell, it doesn't mean that you couldn't come up to another level still, right? If you can clear that fractal at 73,850, and it's an if. I don't know what the unemployment numbers are going to be. If we trigger that SOM rule, I don't know the market reaction, although I would tend to think it's bearish. I don't know what Powell is going to say at the presser, how dovish he's going to come off setting up the market for that September 18th rate cut. If he sets the market up, if he's very dovish, you bring back hopium in the marketplace, you always want to look and see where the assets can climb to, okay? That's going to be really key. So if we just take that same fib from that all-time high down to your corrective low, if you flip that 73,850, you have to look above it. And we'll have smaller patterns on smaller time frames, but you have 79,422 just above it and 86,518 just above that. Is that likely? You have a lot of work to do to even do that. Again, you got to take out these fractal highs. You got to take out 72. You have to take out 73,850. And as you know, you're struggling at that 78% retracement, 69,454. So you have a lot of work to do. Look at your patterns, see what types of patterns you're putting in place. And again, the catalyst will be Powell and all of the econ data that's coming out this week to see what could happen here in the marketplace. So let's go ahead and look at a couple of those indicators. Throw on our MFI. Looking at our MFI, we didn't get overbought. We're still in bullish territory. You could easily wave back up, right? You can have this W pattern form like this and come back up to challenge these highs. We will know. We will see markets moving. You will see the economic data. You will see the market reaction. Everything's a chain reaction at this point. And because you have the major markets, the NASDAQ and the S&P still so suppressed, and you have Bitcoin climbing, could just be climbing to make this top and start to make us a pattern here to roll over, or it could be climbing to give us a little bit more upside before it tops out. We look at this on an 8-hour. I don't have any particular pattern other than the fact that we're hitting that fib once again, finding strong resistance there. You're holding this little channel. So let's see what happens here. If we do this type of move with the fib, 1618 would take you up to 71.6, right? If we can complete this type of W pattern here, do something like this. If this is your pullback, this would be your next target, 71.6. We'll see, guys. We'll see what happens here. Bitcoin is just stacking candles, slow grind here. Look at the 8-hour time frame. It's a grind higher into bullish territory. We'll see what happens with the dead cat bounce in the markets. Solana, same thing. Look at your fib, pulling the fib from 210 up here, cycle high, 3-day chart. Cycle high in this short cycle here, 3-day chart down to your low of that 113 area, 786 is where you're finding resistance. Doesn't mean it has to crash from here. Could just pull back and then come back up. So Solana, I want to watch that 189, which you got just above, up to the 210 area. And I would watch this in confluence with Bitcoin because, again, we have our W pattern that formed here as well. And if you can take out 210, you can look at 236, you can look at 270 as upside targets, but you have a lot of work to do in a major market moving week to get through. Guys, hope you enjoyed the content. Leave me your questions and comments as always. I will reply. Thanks for watching, and I'll see you guys on the Thursday market update.